In the last 2 weeks, I've bailed out of China. I sold my NIO stock at 50. I sold my BYDDF at 28. Is it because I don't think they are good companies and strong companies? No, has nothing to do with that. I believe that NIO will have one of the most popular electric vehicles sold in China, and they'll sell a gazillion of them, and they'll do quite well. I believe that BYDDF could eventually become the largest market cap company in the world because of their batteries, their electric vehicles. They're a totally vertical company. They make everything that they sell. They sell buses. I believe in the company, but nonetheless, I sold it. In this video, I want to tell you why. And I don't want to tell you why you should sell your NIO and your Ping and Zing and Zhang and whatever. But I want you to be aware of what's possibly going to happen so that you can make a good investment decision. And I'll get into that in just a second.
Best of Us Investors presents Carrie Griegmeyer.
What is all the noise about China stocks and delisting? First of all, you need to understand what is a delisting. That is when the United States or the Chinese basically say, this company is no longer for sale in the United States. I had a stock that happened to. And here's what happened. The CEO of this small company got listed, his stock listed on the NASDAQ exchange. I, being an employee and believing in the company, I bought some of the stock. I held it for about 2 years, and then the CEO did not like all the restrictions that the NASDA were putting on him, in particular, his use of his private jet. So he said, well, screw them, I'm just going to delist the stock. And that's what he proceeded to do. Under that arrangement, I was notified that I had 6 months to sell the stock back to the company or get nothing for my stock. He offered a price that was substantially below what I had paid for it and below what it had currently been trading for. But it was take it or leave it. So I took it. I was angry. And that was the end of it. That's what happens when a stock delists. What I think in this situation will happen is the issues come from two forces. One is the United States, and the second is from China. The United States question is the auditing procedure. Trump, in December, signed a bill that basically would require Chinese companies and all companies to adhere, foreign companies, to adhere to our audit procedures, that we could audit their books under the standards by which we demand, or they become delisted. They were given 3 years to do that. For the most part, a number of Chinese companies are saying, no, we can't do that. In fact, one of them is the structure of a Chinese company that owns the Kentucky Fried Chickens and the Pizza Huts that are in China. And they basically said, we can't adhere to your audit procedures. I don't know why, but that's what they said. So what happens when this legislation takes form, or the Chinese basically say, we aren't going to do it? Well, the smart money, the big money, are going to start selling their stock. As they start selling their stock, without informing you that they're going to sell their stock, more shares come on the market and the price starts trickling down. As we get to that 3-year period, they're all out. You're either in or out, but you're not aware of what they're doing. On the other side of the equation is China. And China is saying, we don't want, and Dai brought this, or Didi brought this to attention, that we don't want foreigners owning shares of companies in China that have a lot of internet data. We don't want them ever to be in a position to gather that data on our people. So we're going to make it impossible for those companies to list on the U.S. exchanges unless they adhere to our rules. Again, now you're coming back to the CEO I'm talking about, and these are companies saying, wait a second, we don't want those rules, and we're getting pressure from the U.S., we're getting pressure from China, and this is just all uncertainty. And you as an investor don't want to be involved in that uncertainty. Who does this concern? As of May 5th, 2021, there are 248 Chinese companies listed on U.S. exchanges. It affects them all. If you own one, you have this uncertainty now around that company. You need to be aware of it and determine, is it a risk that you want to handle? Is it a risk that you want to take? Or would you, like me, make a decision that there are good investment opportunities here in the U.S. that companies that I know something about, that I can go look at their books, and they're not in Mandarin, and I can understand what they're doing, how they're doing it. I can see interviews on a quarterly basis with their CEOs, and I can make good decisions. Now, there's a third element that's coming in, and that's investor organizations. Well, what does that mean? That means Goldman Sachs, the big money. And they're asking the SEC and the U.S. government to move forward on this, to give us a direction so that we can make better decisions. Don't leave us out there hanging. The us will be taken care of. You and I are basically a flag in the wind. We'll blow whichever way it takes us. I personally don't care to be exposed to this. So I bailed, as I said, on NIO at 50. As I look at NIO's chart, it's ratcheting down. It has various support levels. I don't know that is because of this issue. I really don't care because I don't own it anymore. But you need to recognize that, and I know you and I both know that the middle class of China is growing leaps and bounds, and they are going to control 80% of the electric vehicle market, while the U.S. companies will control 20% of it. Tesla will be eaten alive over there because they won't be able to match the prices that the China stocks are going to eventually settle down to. And the auto industry is a price competitive industry. After everything is settled, and everybody has their dealerships and has their cars, you're going to buy an electric vehicle the same way you bought an internal combustion vehicle. And that is based on price. And you're going to, if there's a dealership in Birmingham, and I can buy it cheaper in Montgomery, I'll drive to Montgomery to do it. And that's the industry that the auto industry is. But this is not just about the electric vehicle industry. This is all China companies. And you need to recognize that and then invest accordingly. I run my life based on risk and reward. And most of us look at reward first. Wow, what's the potential I could make by owning that stock? What's the potential enjoyment I could have by going out and drinking myself under a table tonight? I could really have a good time. Well, what's the risk? Well, the risk in the stock market is, do I know everything, and do I have a area of control and a sense of control as to what's going to happen with that company? And if I don't, there's a high risk. When I go drink, there's a high risk if I get in a car and drive. So I either do it or I don't. Or I hedge my bet by having Uber come pick me up and then I come back the next day and pick up my car. Risk and reward. And I personally, right now, believe that the risk of owning Chinese stocks far outweighs the potential reward, because it could go like it happened to me. When they get this delisted, you're offered a price. It has nothing to do with the value of the company. It has to do with how much somebody is willing to pay you to take your problem away. And I don't care to be in that position, and I advise you not to get into that position. Okay, I'm Kerry Grinkmeyer. I'm the host of Best of Us Investors. I want to share my knowledge. I've been doing this for a long time. As I said, I've been caught in this trap before. Don't get yourself caught. I'll talk to you again tomorrow.